The biggest thing that I wanted to talk to you about is what's working right now during COVID and where the opportunity is, right? Because some of you guys do commercial, some of you guys do residential. Some stuff went offline, some stuff has come online with respect to loan programs, and us being a nationwide lender, some of the things that we're seeing. So I want to get kind of real specific on some of the products that we can either help you market, because we have a whole marketing team here to give you flyers or pamphlets or whatever you need. We have some really neat programs that we do because we have a banking division, we have a private equity division that can really help you to market certain customers. Some sides of the industry are still dormant. One good thing I do want to say is that non-QM is slowly coming back. The non-qualified mortgage, that kind of got shut down in the beginning of March, and we're starting to release that again. The bank statement program is what I'm talking about. So no-doc loans. So that has started to slowly come back in the secondary market. So right now, one good takeaway is if you work with self-employed people that can't verify their income, that loan program is back, but it's at like 80% loan to value. Okay, so that means that the client has to put 20% down if they're going to be purchasing a home, and they can do either a primary residence or they can do an investment property. Like Sheldon, you and I were working on that client in California. What's her name? Zinc. Yeah. So Zinc wants to buy like a $600,000 home in California, and like 3 weeks ago, the bank statement program wasn't here; it was gone. And we had to do a private no-doc loan at 30% down. And then just like a week ago, we're able to release the bank statement loan again at 20% down. So that customer is getting approved for that product. Okay. So that's kind of what you're seeing, is that they're slowly legging back into the private sector with non-QM loans. So before COVID, you could get up to 90% loan to value with the bank statement loan program. So I suspect that as time passes, well, the guidelines will be a lot more lenient. Basically, as of today, we do have the private non-qualified mortgage, the bank statement, and no-doc loans. So that's a huge thing, because that program was gone, a month ago. So if you guys have self-employed, like, you have people that, they're CPAs, or they own their own business, or they can't document their income from the tax return. This is a really, really strong program. So if you guys have any customers like that's a really, does anyone have any questions on the non-QM or the no-doc loans? Because I know that seems to come up a lot with clients where they can't verify their income.
Yeah, I have a question on that. If I have clients that, like, married couple, one is self-employed, the other one is, regular W-2 employee, but they need the income from the self-employed guy too to qualify for a larger purchase price. Is it still going to only be the 20% down, because it's like half non-QM, half like typical conventional?
Yeah.
How is that being handled?
That's a good question. So we had one like that actually yesterday. If we can use bank statements and W-2s at the same time. So in this example, the husband was self-employed. He owned a washateria and gas station, but then the wife was a nurse. They needed both incomes to qualify. They couldn't do it just on her income as a nurse. So because of that, it still is a non-QM loan, because we're mixing bank statements with W-2s. So it still falls at the max 80% loan to value, because you can't use an FHA or conventional loan with bank statements, right? You have to do a private, like a non-QM.
Got it.
So yes, the people will need to have, as of right now, at least 20% down to do a private no-doc type loan. But I mean, it's better than not having it at all. And I guess that, because there are some people,
for sure,
and like I said, I think maybe next year the 90% will come back. There's one thing I do want to let you know that we have that's really cool, that's very exclusive to our company, is we also have a jumbo product up to 800,000 with only 5% down and no MI. So that's a really, really strong program that we do a lot of. So if you guys are working with customers that are trying to buy a house up to $800,000, you can buy that house with only 5% down and pay no PMI. And the interest rate on the first is a combo mortgage. And the interest rate is very, very low. The rate's like on the first mortgage is like 3.2. So it has a very low rate, and they can buy a house with very little money down. They only have to have a 660 or higher credit score. So if you know anybody that is looking,
I thought the jumbo market like was depleted. That's great.
No, we're still doing it. So the way that we do it is we give them and it has no PMI. So it's a combo loan with a first and second loan.
Yeah.
So the first loan goes up to the conforming limit in your county. Like I think like if you're in Broward or Dayton, you go up to the max loan amount over there. Like in Harris County, it's 510. So the first loan is capped at the conforming loan limit, and then the second is a HELOC line of credit that we give the client up to a $250,000 HELOC. So it's two loans. So we do the first as a conforming, and then the second one is a line of credit up to 95% CLTV. So what ends up happening is that they can purchase a house in jumbo territory up to 800,000, and they only have to put 5% down, because us as the bank, we're giving them a second loan as a HELOC. And the thing that's very compelling about the HELOC piece, so if you guys, I don't know if any of you own a home that had a HELOC before on your home, it's a line of credit. So when you're paying it down, you can also charge it back up later. So let's say that, for example, we have a client that we're working on right now that he's purchasing a $700,000 home in Galveston, Texas, and he's getting a $140,000 HELOC. When he pays that down over time, the HELOC stays in place, right? So let's say in 5 years it starts at 140, and in 5 years it goes down to an $80,000 balance. He still has available credit of 140. So it's a really, really cool product, because he can go back and draw from that line of credit in the future. So if he needs money, it acts as a credit card, as a piggy bank. So it's really, really compelling. If you have clients that are trying to buy a house and the banks are saying, look, we don't do jumbo, like Stacy just said, right? Well, we do have a jumbo program with only 5% down. So it's really, really neat, because some of you guys may be dealing with clients that, some parts of, Florida and Texas, or especially Arizona, where you have homes that are $500,000, $600,000, $700,000, $800,000, and the customer thinks, well, they need 20% down because that's what the bank told them. You actually don't. You can do it just 5% down. So just keep that as an arrow in your pocket, and we can also get you over marketing material on that if you want some flyers or whatever, because obviously you do a bigger deal, and it's a bigger payout, and it's also a huge benefit to the client. So that's a really, really strong program too, that I wanted to talk about. Another one that's really, really powerful right now is the first-time buyer program is still going. So if any of you, do any of you guys deal with first-time buyers? Anyone deal with first-time buyers?
I do.
Okay. So yeah, there's a lot of first-time buyer programs that are available right now, where you can get. One of the things that we do, like we worked with one of Yoshi's clients, gave her a 0.25% lower interest rate and $2,000 off of her closing costs. There's credits that you can get now. You can actually get closing cost concessions. And one of the things that's really cool that we're doing right now through COVID is we're helping clients get up to 2 months no house payments after closing. So if somebody closes in June, they can get 2 months payment deferral to kind of help them to get through this. So that's a really, really powerful thing. You guys dealing with first-time buyers. That's really one thing that's also really compelling with our company is we will take somebody in at a 580 credit score and offer them free credit boosting to get them pre-approved for a loan. So let's say they don't actually qualify for a loan right now. Maybe you know of a client that got denied for a loan with another lender, because we see this all the time. It's a credit issue right now because the liquidity in the markets has dried up so much. If someone doesn't have the best of credit, but they have the income or they have the down payment, I'll give you an example. We have a client here in Houston yesterday. She has like a 587 credit score. Her lease is up in July. So we ran her through a credit boost, a quick cleanup, got her to a 643. She's pre-approved now with her realtor and getting ready to put a contract on a house in LaPorte, Texas. So, I mean, that's how, like, first off, she thinks she's going to have to extend her lease for another year. And we show her a solution. Hey, look, we can fix your credit and get you into a home. You don't need to extend your lease, right? Because you guys are realtors. You want to help the customer to sell their home, help them to buy a home. You don't want them to extend their lease, right? But maybe they think they can't get a loan because their lender or someone told them on TV or online, you have to have a 700 or 680 credit score. Well, I mean, we just lowered our credit scores back down. I mean, it went back and forth. Now we're at a 640, and probably by June we'll be back at a 620. So my point to you is that if you have people that you're talking to that, they have a good job, or they have income, they have a down payment for FHA, or even conventional, they don't have the best of credit, we can fix their credit. So we have a whole credit team on staff that can help to boost up people's credit score to get them qualified. So don't think that when they need to extend their lease or they can't get a loan, because a lot of times they can't. So I'm sure you guys come across that all the time where someone is, they're not really ready to go and they need help with their credit. So, but these are some good takeaways. I think that, because the way I look at it and kind of what's helped me to build my business, and all of us have worked together in some capacity and done deals together, is if you can help just one extra client and have a solution with a loan program, that's going to make all the difference, right? And maybe you weren't aware that, hey, you can do this loan program and you can help somebody to get, you help them, to get funding. Like we do, we're a huge commercial lender too. So if any of you guys, does anyone here do commercial? I know Sheldon, you do a lot of commercial, and I think Yoshi and Rob, but so commercial right now, you've seen that's gotten pretty much killed, right? The commercial market, and you see that on Wall Street, they're predicting a huge crash in the commercial real estate market. The biggest thing that is saving that right now, which Rob is an expert, is an SBA. So if you guys have customers that need funding, we specialize in the SBA program, and there's two different types of SBA loans. There's a 7A and a 504 that is funding very strong right now. We're doing hotel loans. I mean, Rob's got all kinds of deals that are working with the SBA sector too. So that's a really important thing. And also, I know a lot of you guys do fix and flip and hard money loans too. Hard money is still going very strong right now. Balance sheet lending. Fix and flip. The one thing, I know Yoshi, we were working on applying with a line of credit. The line of credits have been put on hold for right now. They're expected to come back online in June. That was one of our most interesting products ever. You could get a line of credit for fix and flip and for a ground up construction. That's supposed to come back in June. It's on hold right now. So basically, if any of you guys are trying to do fix and flip right now, we do have that, but the maximum loan to value is 80%. So if you guys have anyone that's looking to do fix and flip, we can still approve for that nationwide, but the maximum loan to value is 80% financing right now for that too. So I want to kind of talk to you guys individually and see what are you guys dealing with? Anything coming to mind? Any ideas about these different programs that we're talking about? Make all your questions answered. Does anyone have any questions about any of the programs or some of the challenges that they're facing and running up against right now?
Question.
Yeah.
What is the turnaround time for the credit boost?
I mean, that's a good question, Sheldon. I mean, it just depends on the client, right? I mean, some customers, like this one client, took 2 weeks. It depends on how extensive the repair is. So if somebody has like their credit is really messed up, I mean, it could take a few months. I won't know. Typically, if someone has a 580 credit score, I'll just tell you historically, that can be done within 30 days. If someone has like a 510 credit, you're looking at probably 2 to 3 months. So it just depends on the person, their situation, on how severe it is, right? Is it charge-offs? Is it collections? Is it medical? Do they not have revolving? Can we add lines of credit? Can we add authorized users? You know, so it depends on the client, right? So typically that's why we kind of say, well, if they have a 580 or higher, we can start to pre-qual them and then get their credit cleaned up and then give them an approval letter once they're ready to go. But, you know, it just depends on the person's credit profile.
Gotcha.
So yeah, but what about you, Monique? What are you seeing in your area? I mean, any of these, do you think any of these programs could help you to close some more deals, or?
Yes, particularly that jumbo loan sounds really good. I have a client that may be able to help. I just spoke to I'm sorry.
Oh, you're good.
Home and my dog is barking. That's why I had myself on mute. Yeah. But I had a client that I was just talking to yesterday, who it looks like her credit may not be that great, but she works for the post office. So that boost may be helpful for her as well. Yeah.
Listen, I mean, we don't charge for it. I mean, so, I mean, in my mind, I mean, what does the customer have to lose? There's no application fee. There's no cost.
Right.
There's nothing due up front. And if they truly want to become a homeowner, they just need someone to hold them by the hand and show them the way. So,
right, of course.
So I think the first loan you and I closed together, we've had to fix their credit to get them to qualify. So we're very used to the process of doing that, where a lot of lenders shy away from it. You know, we embrace it. So,
okay.
Yeah, no, that's good. I mean, so I know, Stacy, I know the area you're in, I mean, I would think that you probably have, I mean, that's the going price of, I mean, there's a lot of properties in that $600,000, $700,000, $800,000 price range. And,
yeah,
you know,
yeah, and that jumbo product can be huge, because I was told around here that most jumbo loan programs have been eliminated for the time being. So that's huge that you can still offer that, because down here in Broward and Palm Beach counties, the prices are high, and they're holding high right now. A lot of people thought they would start to come down, and they're really not right now, from what I can see. I don't know if that's going to change, but right now they're holding high. How are you guys dealing with buyers that may be furloughed, or they may have gotten their income reduced, but we're led to believe it's only being reduced temporarily? How is that taken into consideration when you're qualifying them?
Yeah. I mean, that's the thing. I mean, that's one of the scary things right now, what we're seeing. And I think that's why a lot of lenders are spooked, is because they're closing on a loan and they're quickly applying for payment deferral. And that hurts the lender, actually, because government hasn't bailed out servicers.
It's awful.
And so what's happened is that if the customer is not making the house payment, the lender has to make the payment for them, because there's no relief coming in yet. So unfortunately, there's two things on that. The borrower, at least with our bank, is going to have to execute, an affidavit at closing that they're not going to file for a payment deferral, or we won't be able to fund the loan. I mean, because if they have that's why we're giving the 2 months grace period, because if they say, well, hey, we're and quickly file for a payment deferral,
do you?
then
you do.
Our company, we don't have the extra capital to pay for people's mortgage.
No, you said I don't want to see you. That's what you said.
So the other thing is that furlough, we have to qualify them with their current earnings, right? So if their current earnings are, they've been reduced by 15%, I mean, we're going to have to qualify them with that. And then the other thing is that what's happened, debt ratios have been reduced. So before you could get somebody approved with 56, 60% debt ratio, those ratios have been pulled back to 45, 50%, and they want to see the client, if they have a lower FICO score, that they have some extra reserves. And so, I mean, as of today, that's the current market that we're in. It's been adjusted, but you know, the thing is that it's changed. I don't know if when anyone here during the crash of 2008.
Lived through that one too.
So at that time, it was very similar, where the markets freezed up, right? If you recall, banks went out of business, guidelines got tighter. So, and that's kind of what's happening right now, because no one really knows how to deal with this virus and what the repercussions long term are. I mean, you saw today the market's already selling off today because there's a lot of speculation too soon. And now, how are you going to deal with these ripple effects? Right? So, you know, so I think that we're kind of at touch and go right now, and try to figure this out together. I can tell you, you know, what I'm seeing that's working. Conventional is very strong right now with extremely low interest rates. SBA, if you guys have commercial customers, SBA is very strong. Hard money loans, if any of you guys deal with hard money, we're still doing a ton of hard money lending. And then the non-QM loan is back. We're getting ready to do a large marketing piece on that. And then, like I said, if you guys, this jumbo program, what I'm going to do after we get done with this is we'll send you out flyers on all these programs individually. And then that way you can have, you know, all of that information. So, and then I wanted to kind of circle back with you, Yoshi. Do you think that any questions or any of these programs, how could it help your business?
It's going to be really helpful for me, especially the jumbo, because I have actually 3 clients that are coming up that were asking for a higher price point, but they were concerned, like nurses and things like that. I have one nurse that they're changing her from location to location, so then that messes up what her check, because it looks like 2 different employees, even though it's the same thing.
Mm-hmm.
So she was concerned about that, and she's in above 500,000. So this will be really good, because then I know that y'all will be able to see those 2 are actually one, if that makes sense.
Yeah.
Because they happen like all over the place. Yeah. So that'll be very helpful. And then I have, of course, some investors that just reached out to me a couple of weeks ago. I've been kind of swamped with them. So this, the one that you just talked about, the fix and flip, getting that information to them will be very helpful. So y'all might get bombarded with a bunch of email.
Yeah, no, that's good. It's good. I mean, yeah, we're doing fix and flip right now. Like I said, it's currently it's up to 80. We do have in Texas. Let me also go back. In Texas, we have a fix and flip up to 100% financing for seasoned investors. So, like for example, I think Sheldon, you're looking at a deal in Houston or Woodlands for like 800,000, and we'll go up to 60% of the ARV or the 100% loan to cost. That means you can buy that property with no money down. It's a short-term bridge loan, but it's only for seasoned investors in Texas. And so you could technically get 100% financing on a hard money loan. So, so that is available too, in case you guys have any clients that are looking for 100% finance. I know Rob does a lot of that stuff, where Rob will purchase a property, a foreclosure, and then get rehab money to fix it up. So you could get 100% financing, but with a maximum of like 60, 65% ARV. So, well, I hope that, you know, like I said, I mean, these are programs that can probably help you guys. So if you run into clients where, I guess some of the takeaways, if they don't have the best of credit, but it seems like they have a good job or they have money for a down payment, think of us, because we can probably help them to get them approved. If you have a customer that needs a jumbo loan and they're discouraged because they think they need 20% finance, it's not true. You can do it with only 5% down with a 660 credit score. And like I said, if you have a customer that's self-employed that can't verify their income, think about us on a no-doc loan, because this could probably help a few clients this year as opposed to turning them away. You know, so anyone have any questions, or I miss anything, or?
I have one more question. Are y'all still doing the land? loans, or you're not doing that
Or we do
currently?
land loans. I mean,
Okay, you
so
are.
the thing that Yoshi, on the land loan, that what matters is, like, are they going to buy the land and just hold on to it, or are they going to do something with it? Because that would help us to determine the type of loan. Like, we do a lot of ground up construction with FHA, but like, let's say the person wants to build a apartment complex or a mobile home park or a senior living community. That's way better if we do the whole package like that,
Mm-hmm.
versus, well, I just want to buy raw land and just sit on it. Because if you want to buy raw land and just sit on it, we don't know what you're going to do with it. So the down payment is going to be like 40%, right? But if you say, well, look, I want to build a $20 million apartment complex, well, FHA is still funding that program with only a total of 15% down on the whole package. So they can get the construction, they can buy the land, they can do everything in one closing with only 15% down as opposed to 40% down. So it's a lot more
Right.
compelling if we know going into
What they want.
what their intention is, and then we can build the loan around it. So, yeah, I mean, they can do raw land if they wanted to, but if we can get some type of idea about the type of loan they want to do, then it would help us to give them a better long-term loan for vertical financing. So,
Okay, thank you.
yeah, no problem, no problem. Okay, anyone else? Rob, you have anything? Did I miss anybody?
I have 2 questions.
Yes, sir.
First question on the no doc loan. Are there any restrictions on that? Are you allowed to take several seconds on that or no?
So it depends on primary residence. No, on a primary residence, they won't let you do a seller second. If it's an investment property, yes, you could do a seller second. A business purpose loan has way less restrictions as a non-owner occupied than owner occupied, right? So owner occupied, they won't let the seller come in to carry a second mortgage. You know, as far as our closing is concerned, you know, but on an investment property, you could do it all day long. So whether it's 50%, 20%, 30%, seller second, and then you could get up to 100% LTV. So yeah, if you have a situation right now, and I've done several of those, where you have a very motivated seller, they're willing to carry a second, you know, and it's a commercial or non-owner occupied, it can totally be done.
Gotcha. And the second question is on the jumbo loan. Is this a full doc?
Yeah. So yeah, because it is a full doc loan. So the jumbo loan that I was referring to with only 5% down, that's a full doc loan, either W-2s or taxes for the last 2 years. It's because the first mortgage is conforming, they have to qualify with, you know, a debt ratio below 43%, 660 plus credit score. This is for somebody that, you know, they have decent credit, they can verify their income. So we do have private jumbo loans too, with bank statements or no doc, but the LTV is going to be like 70 to 80%, right? Because you got to remember that whenever you're not disclosing income, the risk increases, and then the LTV is going to be right. So we don't know their income. Well, then we need to protect the lender and then lower the LTV, right? So, but the full doc loan, I mean, it's for somebody that, you know, they have white collar, maybe high end blue collar, they have good jobs, but then they don't want to part with all their cash because interest rates are so low. Well, hey, I can buy a house only 5% down. That's pretty interesting, and I can get a nice home. You know, I mean, there's a lot of nice houses in Georgia for $800,000. You know, and that'd be a great marketing piece. Hey, you can buy this house that's only 5% down. You don't need 160 grand down. You only need 40 grand down. You know, and you can get a super low interest rate too. So it's very compelling. I mean, we do a lot of them. So just think about that, because there's not a lot of lenders that do that.
Gotcha. And I have one more question.
Yeah.
With the new appraisal regulations, how are you guys adjusting to that?
Well, one of the things that we've done is, so we've opened up our own appraisal firm, right, to kind of circumvent and deal with this. And a lot of times now we're having to do desktop reviews. And us opening up our own appraisal firm and doing desktop reviews, this allowed us to be able to complete the loan process, because a lot of sellers, to your point, or even agents, are not letting people in their homes. There's been a lot of issues with that and turnaround times, or the appraiser doesn't want to go into the house, right?
Right.
So this is how our appraisal firm is going to open up on June 1st. And then we're also, with the Fannie waiver of the desktop review, we're accepting that. So we can just do a desktop review of the property.
So does that allow you to utilize your appraiser now at this point?
Does it allow us to do what?
Utilize your appraiser, because I know the regulations where you had to submit to an appraisal company and they pick who comes out. So does that give y'all the ability to dictate your appraisal who's going out to the properties?
Well, so the appraisal company that we've launched is an AMC. So it's a third-party AMC. Let's say that the appraisal was done prior to 6/1, then we'll accept the desktop. But after 6/1, we're just going to use our AMC to be able to conduct the appraisal. So it's not like the appraisal. It's a separate company. It's not our company. I mean, we own the AMC, but it's not like it's not under the same umbrella. So so all the compliance is in line. But basically, if right now, because what we've had to do is do a lot of desktop reviews just to close the loan. So if you're in a situation where you can't get into the property, there's issues or problems with that, we're accepting desktop reviews.
That's it. Appreciate it.
Yeah, no problem. Thank you, guys. We'll get some flyers out to you guys, and then if you have any questions, you can always get a hold of us. You can reach us. We're here for you. We want to help you to boost up your business. Y'all take care.
Thank you. Okay, bye-bye. Thanks.
You guys, come on.
Thank you so much, Angelo. Great meeting.
Be safe out there.
Thank you so much, everybody.
Bye.
Bye.